Broadcast is now starting. All attendees are in listen-only mode.
Welcome to our Experien and Shine 360 webinar. It's great to have everyone here. And just while we've got some more people joining our webinar, I thought I'll go through a little bit of housekeeping. This is the first webinar which is going for Shine 360. So please bear with us if there's any technical issues along the way, but we should be okay. So if you are on an iOS or an Android, you'll be able to flick between the two screens to either see the webcam or see the slides. I'm sure you'd prefer to see the slides, but that's up to you if you want to flick between both of those. So the plan for today's webinar is to make it as interactive as possible and to run some polls throughout the session, and you're also free to ask questions as we go along. You'll see that there is a questions box, and that's at the right-hand side. So we will have a question and answer session at the end, so you can ask Clive any questions that you like. We've got time allocated for that, so yeah, let's get started. We've got a few people that are joining, but we'll probably kick off now. So what I wanted to do first is to introduce why we're here. And the webinar today is brought to you by Shine 360. And even if you're a member of Shine 360 or if you're not a member of Shine 360, I'm just going to give you a brief recap so you can actually see what the program's about. So the loyalty program that we're running is called Shine 360. And what is it available to? It's available to all of our independent practices, whether you're a one-man dentist or whether or not you are 5 or 6 chairs. The program has been designed around you. And the whole focus of the program is to offer you discounts and savings based on your spend and your loyalty with us. So what does that mean? So you will get discounts off all the products that you buy every single day, and then on average, the discounts that you're entitled to is about 15% discount. Then on top of that, the discounts, on top of the discount that you're entitled to, you're also entitled to a rebate on your account as well. And that rebate is based on everything that you buy. And that rebate can be up to 4.5%. So if you combine your 4.5% rebate and your discounts, you're starting to look at benefits and savings for your practice. And that's where we're looking at growing your practice wealth. And then that's the whole focus of the program. So the second part of the program is our business partners. And these business partners are designed to bring savings to your practice every single day. And then by giving you savings and giving you discounts on these particular businesses that your practice deals with every single day, you'll be able to earn discounts off of these products. And so by doing that, we can give you savings you wouldn't be able to get anywhere else. So without further ado, I'd like to pass you over to Clive. And just to give Clive a brief introduction, Clive Leventhal is an actuary and founder of Experien Insurance Services and has been for over 15 years. He's worked overseas and in Australia for a range of large insurance companies. Now, Experien Insurance Services helps over 6,000 clients with their insurance and financial planning needs. They specialise in the medical sector and with doctors and dentists in particular. Experien has enjoyed challenging the incumbents on dental professional indemnity insurance and prides itself on offering additional choice and shaking up the status quo. Most important to Experien is the help that they provide at claims time and this is when they aim to make their most value. Clive, welcome to our webinar.
Thank you, Jade. It's wonderful to be here and it's wonderful to deliver this content to you today. You'll shortly see that we do get involved in a lot of claims for dentists across a range of insurance categories, and the aim of today's presentation is to share those learnings and those observations of those claims with you. That can be useful to help you to prevent claims from happening, but also to ensure that in setting up your insurance cover, you set it up in a way that make sure that the financial implications of any claim arising is mitigated as much as possible. There will be a lot of information in the slides that I'll be going through, and not all of the information will be talked to, but at the end you'll be given details of how you can contact me if you would like a copy of the slides. And we're also going to conduct some interactive polls along the way, which will be fantastic to hear from you if possible, and we can comment on the observations you're finding in the market. So Experien Insurance is a national insurance brokerage. We specialize in helping dentists with a range of insurance across 3 or 4 categories. We focus very much on a personalized model as opposed to a call center model, where we allocate personal advisors to each client so that you can ring at any time and you can reach your advisor on a mobile phone, or if they're not available, there's extensive coverage and support thereafter. As Jade mentioned, where we focus extensively on is the claims aspect. No one likes a claim to go wrong, and we act as a big brother and as a support mechanism to try and ensure a claim gets managed with at least with the least stress possible and as expediently as possible. We also don't necessarily try align ourselves to one particular insurer, particularly when it comes to life insurance. We tend to work across as wide a spectrum as possible to give clients choice and to, where possible, actually keep the insurers honest. So in terms of the numbers, we help about 1,000 dentists, and fortunately it's growing each year with professional indemnity insurance. We've got a very rich database there, which I'll shortly be sharing with you in terms of claims experiences and what we're seeing. With income protection, life insurance, and trauma insurance, we help about 1,500 dentists nationally, and we've helped clients enjoy or receive over 270 claims of this type, amounting to over $60 million in the last few years, as well as business insurance, where we help approximately 500 dental practices nationally. And again, I'll be sharing the types of claims we're seeing for business insurance. So we're going to open now, before I cover the first topic of dental professional indemnity insurance, with a poll question. And that poll question, I believe, should be coming up on your screen.
So the poll question that we're going to ask is, have you ever made any claims on your personal indemnity insurance in the last? So if you'll see the poll pop up on your screen. So we'll give you some time to answer that. So has it been 0 to 2 years? Has it been 3 to 4 years? Has it been 5 to 10 years? Or have you never made a claim at all?
And that's for your professional indemnity insurance. It can be also for your practice, or for those of you who are practice managers, for the principal dentist or any dentist inside your practice. We're aiming just to get a sense of how many of you have come across or experienced the claims matter or claims process.
Okay, and we're just going to close off that poll now. And then, Clive, I'm just going to share those results with everybody.
Great.
So we're looking at 0 to 2 years, we've got 13%, and the highest we've got no claims made at 88%.
Okay, fantastic. So that is approximately in line with industry experience and the statistics that will come up shortly. So kicking off with dental professional indemnity insurance, what we've done is showed in the slide an analysis of the past 5 years and how many clients in a 5-year period, or how many insured dentists in a 5-year period, have had a matter arise, and that matter could be a regulatory claim or it could be a civil claim where the claim is simply related to compensation, and where a regulatory claim is included, that's where APRA, or depending on which state you're based in, the local authority, such as the health ombudsman, would bring a matter against you. How many of our clients have had a claim? And you can see approximately 1 in 4 clients will experience a claim over a 5-year period. So it's quite common, and the key message there is you're not necessarily out of line, or it's not necessarily unusual for you to find a matter brought against you. So in terms of the number of claims, the majority will only face 1 claim in that year, and you'll see, unfortunately, there are a few dentists who will have quite a high number of claims, whether it's 8 or 9 or 5 in the statistics shown. And those dentists are usually quite problematic and could be facing some serious actions from the regulator. Again, statistics will come up shortly on regulatory claims. And it's often seen that those dentists leave the industry and aren't able to practice either because there's severe conditions imposed on their registration, or they can simply become uninsurable. So the next chart shows the quantum of the cost of defending these claims, and the cost of defending these claims includes both legal fees, which can be well over 50% of the cost of claim, depending on how long it runs for, as well as the cost of any compensation given for a civil claim where there's been harm or injury caused to the underlying patient. So again, there's the 76% who incur no costs, about 2% incur quite expensive costs of well over $50,000. You can see we've had a claim of nearly $400,000. Fortunately, we haven't had any extremely large claims, which you can find in the industry of $1 million or more. And the two largest claims we've had in the recent past have been related to extractions, where there's been complications arising from the extraction, including a broken jaw in at least one of those cases. And then you'll see quite a wide range of what I would call medium-sized claims, which are probably between a $15,000 and $30,000 level, and another very big rump of claims costs probably below $10,000. And a lot of those claims costs are related to defending our clients for regulatory matters where there's legal support provided in a hearing before the dental board or before a regulator such as APRA. The next slide is the interesting one, which shows the type of procedures that are leading to claims, again, over a multi-year period. And what you can see quite clearly there, and it will be supported by the slide that will come up next, is the vast number of regulatory claims that are now being faced by dentists. And that is caused by a range of factors, one of which, and possibly the greatest reason, is because of the ease of making a regulatory claim by a patient. It doesn't cost them anything. It's a simple online process, which is very quick, and unfortunately can be used as a tool to try get out of paying for the fees, in alleging, rightly or wrongly, that the treatment might have been faulty. And it could also be frivolous and mischievous in the sense of perhaps for malicious reasons such as a competitor, or for other related reasons such as a disgruntled staff member leaving. So the regulatory claims make up the vast majority of claims by number, but not by cost, because the cost is simply to defend the matter. And you can see items such as extractions have been very expensive when they do happen. Interestingly enough, orthodontic and implants, which some people do worry about costing a lot of money, haven't necessarily proven to be a big burden in terms of the cost of the scheme. Now, we're going to go to our second and third poll questions now, and these are related to this type of statistic. And I'm going to hand over to Jade to run the next two poll questions.
Okay, everyone. So our next poll question, so there's going to be two. The first one is, which treatment type do you think has the highest chance of a patient complaint, which means it didn't meet the satisfaction? So we've got root canal treatment, we have extractions, we've got bridges and veneers, we've got implants and other. So if you can let us know what treatment you think has the highest chance of a patient complaint. And we'll give you just a little bit of time for everyone to start to respond. Okay, I think everyone has responded. Okay, we'll close that off now. And then we'll share this one straight away with everybody. So we've got bridges and veneers being the highest chance at 50%. We've got root canal and extractions at 20%, and then other at 10%.
Okay, thanks, Jade. Yeah, again, that's quite similar to the experience we see. We've had quite a few cases recently with veneers and the colouring not meeting satisfactory outcomes. And again, it's very important, you'll see shortly, to get informed and written financial consent to the treatments and highlighting to patients what are the risks of the treatment. Those are really good practices to try avoid complaints or action brought against you if the patient is not satisfied, or if the patient is simply trying to get out of paying for the treatment by alleging it hasn't worked to their expectations. All right, Jade, next question.
Okay, so our next question is, and it's similar to the last one, what treatment type do you think has the highest chance of clinical error? So, which could lead to a negligent claim? Have we got root canal treatment, extractions, bridges and veneers, implants, and other? So, again, we'll give you some time just to get those answers out. So your choices are root canal treatment, extractions, bridges and veneers, implants, and other. Awesome, guys. Thank you. So I'm going to close that poll off now. There we go. And our results are root canal treatment is definitely the winner in that one at 80%, and extractions and implants have got 10% each there.
Not surprising. Not surprising. All right. At least everyone's consistent. Okay.
Sorry. Yep.
Moving along. So the way we structured our product is similar to others in the industry, where we act as the big brother for the dentist in liaising with a very stable, large insurer. The two core features of the product services are providing legal support if a matter is brought against the dentist, and financial support if the matter is a civil claim whereby compensation might be needing to be made. There is peripheral support in the form of other dentists that can provide peer-to-peer support, and we also have risk management services, which I'll show you shortly. Now, some of the other features of the proposition we provide is for those of you who are general dentists that are doing ortho implant work, there isn't an extra premium simply because the claims experience we've seen hasn't justified the need for an extra premium, unlike some of the other competitors. We offer historical tail cover if somebody joins. Our pricing is not dependent on you being a member of the ADA or not. The price doesn't go up if you aren't a member of the ADA. We pride ourselves in partnering with a fantastic legal firm, a national firm called Barry Nielsen, otherwise known as Barry Nielsen, and we like the access to the independent legal support that they provide. We have flexible policy anniversary dates, meaning people can join and renew at any time of the year, and there's also access to independent clinical support from dentists who are still in private practice. Now, this slide is arguably one of the most interesting slides in the session today, and it shows across the industry, across the country, the number of regulatory matters brought against dentists for all the various bodies and sub-bodies, and it's collated by APRA, which is the overall aggregator, and shows the statistics over the past two reporting periods, which is financial years 17 and financial years 18. And what you can see on the left-hand side, firstly, is the percentage rise in the number of notifications brought against dentists nationally in that first financial year. And the number was, the one on the left is across all medical practitioners. That includes dentists as well as doctors and other practitioners that are regulated by APRA. So there was a large jump there in financial year 17 of just under 20%, and the following year it rose again by 8%. And that is showing that the consumer is becoming a bit more aggressive in terms of lodging complaints, because the number of practitioners or the number of consumers hasn't risen by that same percentage. What is concerning, though, for dentists and dentistry is the massive jump that we've seen cumulatively over these past two periods, where in the first period there was a ginormous jump of just under 34% in the number of matters brought against dentists, and then it was followed by another 4% growth in the following year, at least a smaller percentage, but it's in addition to that first jump and hasn't decreased. So the approximate number of notifications brought against dentists was over 1,000 in the most recent reporting period, which is ended about 18 or so months ago. So what that means in percentage terms is across all practitioners, including doctors, the probability of a matter in any 1 year being brought against you is approximately 1.5%, but for dentists, it's as high as 4%. So nearly 1 in 25 per annum will face a regulatory matter. And again, the key message there is it's not unusual, not uncommon, no matter how good you are and thorough you are, to potentially face a notification or needing to attend a notification, a hearing in response to a notification brought against you. And you will see that often the matters brought against can be frivolous and are dismissed in the slide that follows. So approximately 900 dentists per annum will face a regulatory matter. And then this slide shows what happens statistically if you are one of those dentists that faces that matter. And from a comfort point of view, you can see as many as 70% do not progress any further, are dismissed or closed without any findings being brought against the dentist. The next three, though, are the concerning ones, and the numbers at the bottom of the blocks are the number of dentists typically each year that are in that category. So you'll see percentage-wise, about 14% will be cautioned or reprimanded, which isn't great. It isn't a good outcome. There's about 80 to 90 of them, but it's certainly not as severe as or concerning or have as big implications as the final two columns or blocks. The second last one, which is approximately 15% of the outcomes, lead to reasonably severe implications such as conditions or the dentist being required to undertake counselling or further training. So again, about 80 to 90 dentists there, and that can have severe implications on not only your the way you practice and how you supervise, but also your professional indemnity insurance, which is a mandatory requirement for you to carry on practicing. And then about 0.5% of the matters brought up, which is about 5 dentists a year, are extremely severe, where their license can be revoked and they're no longer able to practice as a dentist in Australia. Now, this slide covers a topic that isn't well known, but is extremely important for practice owners or for dentists who do employ staff or dentists who might have associates working for them. Everyone knows, and every dentist has individual professional indemnity insurance for themselves. But what they do need is to have the equivalent concept, but applied to the actual operating legal entity that governs or owns the practice where the dentist is working, employing staff or employing associates. And the reason behind this is that, firstly, if a incident does happen, it might be that the lawyer defending the patient brings a matter not only against the insured dentist, but against the legal entity that operates the practice. It might be a service company for having a fiduciary responsibility, for having a legal responsibility, for making sure that that dentist works under the most appropriate conditions, is supervised, has the right training, maintains infection control, and anything else needed to avoid something going wrong, and will name the practice either as a first, second, or third defendant. And for some people, their practice might be owned legally by a spouse, a family trust, or some other entity which has as a director or has an associate person, which is not just the dentist. And that person will also need cover to defend the entity and themselves against any matter brought against them. What's also, unfortunately, not uncommon is where there are associate dentists in a practice, and the associate dentist might come and go and change over time, a particular patient might be treated by multiple dentists over a period of years. And if a faulty treatment took place by one of the dentists that is no longer there, that dentist might not be contactable or reachable in terms of the claim that a patient wants to bring against the treatment that was served, or it might not be readily identifiable who and at what stage was the dentist that actually made the mistake that led to the complication or problem. So it's easier then for the lawyer to bring the action against the practice rather than trying to work out which of the 3 or 4 dentists that might have worked on the patient is the best person to target. So that's a coverage called practice indemnity cover. So it's the same as, it's also a category of medical malpractice in insurance. It's the same as the professional indemnity insurance for the individual, but covers the defense costs and compensation costs for indemnity claims brought against the practice. Typically in a product like ours, that cover is not that expensive to add on. It's a few $100s a year, but I have seen with some concern with other insurers that the practice cover isn't explicitly noted, isn't explicitly given, isn't explicitly assured on a policy schedule or in the policy wordings of that indemnity policy. So take great care, for those of you who do own practices, to be 100% sure that your practice entity is very explicitly covered without any ambiguity. The concept of an insurer of last resort exists for doctors, and it's a very important concept for doctors, and was introduced in around about the year 2003 when medical malpractice insurance was facing major structural problems in the area of doctors and doctors practicing medicine. What it means is that if you're a doctor and has had a large number of claims or matters brought against you, within each state, each insurer, there is at least one insurer nominated by the government that has to accept you for malpractice insurance, and there's a cap on how much they can charge you. So you'll never be left without cover. You might just have to pay more, or you might have a couple of exclusions applied to your policy. Now, unfortunately, with dentistry, that concept doesn't exist. There isn't a concept of insurer of last resort, which means that if you have had a number of claims brought against you or some regulatory matters brought against you, it is possible that you might become uninsurable. And what that means is making sure you minimize your risks, you follow all the recommended procedures and practices in your training and wherever else you've undertaken CPD training from your malpractice insurer, that you follow those quite carefully to avoid having many or too many claims. Doesn't mean one claim will make you uninsurable, doesn't mean 2 will make you uninsurable. I'm talking here about probably 3, 4, 5, 6, 7 claims in a period of 4 or 5 years' time. So just take great care as a dentist in avoiding any part of any possible action that could be brought against you. There's a number of issues that we see commonly arising, and I won't talk to all of them for the sake of time, but these are again available. If you email me, you'll get my email address at the end of the presentation. I'd be more than happy to email these slides to you. But the typical matters we come across are where there's disputes, again, that can be frivolous, about the quality of the treatment, and refunds are being sought. Extractions have been a nasty set of claims for us, with complications arising. I mentioned associate dentists and associate dentists coming and going and trying to work out who was at fault. Infections and infection control is a common topic, especially because an infection can lead to complications, which can lead to hospitalization and other nasty medical conditions. We had a case where a patient fell into a coma from a infection, and that was obviously an undesirable outcome. Root canal, as per the poll answers, can commonly lead to issues. Implants, crowns, bridges, as would be expected, and a number of dentists face health audits from health insurers, as well as many of you would have faced a Medicare audit. Recently, there was a lot of letters sent out to doctors where Medicare was auditing the veracity of the claims that were being lodged over a prior period. We have a number of examples we can also share of claims being made. Some are humorous, some are quite serious. Again, I won't go through all of them, and more than happy to share these in sending you the slides. In addition to claims where there might have been legal or other support, we get a number of queries come through for advice from our peer team of dentists, and these again are examples of the type of questions that are commonly arising and can be available on request. In terms of prevention, there's 11 guides here. The top 2 are making sure that you get consent beforehand, consent in the sense of both treatment consent, what you will be doing and how you'll be doing it, and financial consent before you start the treatment. So making sure the patient is completely aware of the costs that will be incurred along the way, and that there is a risk that the outcome might not be as per the patient's expectation, and making sure you do that verbally, and getting written consent will protect you and prevent a number of possible issues arising and escalating going forward. The first point there is also extremely important with regulatory matters, and that is making sure your clinical notes are well documented, up to date. Never try adjust those retrospectively, but that's the evidence. Whenever you face a regulatory matter or even a civil matter in the courts, your clinical note is what the prosecutors and the adjudicators will focus on extensively. They essentially are objective, and they discoverable where it can be sought before the case is heard. So making sure your clinical notes are excellent is a powerful tool to not only keep yourself in adhering to all the guidelines, but making sure that you've got really good evidence and you can show consistency in the way you practice, which can help you with any claims. We have a wide range of risk management tools available, and one of the tools is a guideline which is available at the end of the presentation for download on managing stress should a matter arise. So you would have seen that 1 in 4 or 1 in 5 dentists will have a matter brought against them each year. When a matter does get brought up, it's a very stressful occurrence. It can be very emotional, very scary, if in particular you've never had a matter brought against you. And the goal of this is to give you comfort about what typically happens with the process, how you'll be supported, and hopefully how you needn't worry too much about what will happen, and that the matter will hopefully be successfully defended. But the stress associated with the claim is high and not uncommon. Dentistry is a stressful profession. You'll see shortly I'll talk about income protection claims and the rise in the number of mental illness cases we see across the industry. So you're not alone if something does happen, and you will be given extensive support along the way. For clients of ours, again, there's a range of risk management material based on topics we commonly see arising, which are made available to you to help guide you in preventing those risks from arising. Some tips again for your indemnity insurance are shown up next, and just the one I will talk to is being aware of what your coverage limit is for regulatory claims in your indemnity policy. Now, some policies in the industry will have a $100,000 limit for costs incurred in defending you for a regulatory matter. Ours and a couple of others also have a much higher limit of 5 times that, which is $500,000. And with the propensity of regulatory claims, we think that having a high limit is important, even though historically it hasn't needed to be tested. But with the statistics you've seen, I would certainly, if I was you, feel a lot more comfortable knowing you would have as much support financially behind you should the need arise. Again, the remaining points are available to be sent to you should you require them. I'm going to change topics now and cover another important insurance category, primarily for those of you who own a practice or might own a practice in the future, or for those of you who work in a practice, you're able to point these out to the owners or the practice manager around what is typically seen and needed when it comes to insuring the practice and the equipment in the practice. So you'll see here that when you do consider taking out practice or renewing your practice indemnity insurance each year, your business insurance, there are at least 11 major categories of subcover that you need to think through and consciously decide, do you need or want that cover, and is it applicable to you? Simply buying vanilla off-the-shelf cover can lead to gaps, can lead to great omissions, and that can obviously lead to great distress should something happen. And unfortunately, with dentistry, there's a lot of water involved, there's a lot of moving parts involved, and the chance of a claim arising isn't negligible. So, for example, two categories that I'll mention out of this 11. The first one is what's called business interruption cover, a very important cover which will replace the income in your practice should your practice not be able to operate. For example, if there's been a fire and the practice is closed until the repairs are made to the premise that was impacted or destroyed by the fire, there might be wide-scale damage in the area in which you work, such as a power failure from a terrible storm, which might last a number of days or weeks, where your practice won't be able to open. What this does is step in and replace the income that has been lost from the practice, which can be crucial in meeting your overheads and your other financial obligations, such as any loans you might have on your practice. Another important category, which isn't well taken up, but is very important to have because the consequences of something happening is high, and that is what's called cyber cover. So what cyber cover does is help you should the IT systems in your practice be compromised, be hacked by external cyber hackers. What they can do is hold your data to ransom. They can threaten to release sensitive medical information in the public arena, which can lead to great fines and great embarrassment. And they can also lock out your systems until you go and find some exotic websites which you use to buy cyber currency and pay extortion money. What cyber insurance does is help step in, crisis manage the situation for you, pay any fines or bribes, and hold your hand along the way to get you back up and operational as quickly as possible. So it's important, if you haven't had this experience, to go through and consciously think and discuss with a professional which of these 11 categories do you need and which do you have. Now, in terms of how much dentists are paying for their business insurance, again, we're sharing some of our experience with you. Typically, it's around about the $2,500 to $3,000 mark. A small practice obviously will be paying less, and a person who owns multiple practices could be paying as much as $14,000 or $15,000. 4 key points I'm going to highlight is that what we're commonly seeing as mistakes is dentists aren't insuring their equipment or machinery for breakdown, and it's a machine or within dentistry that's prone to breakdown. It's used very extensively. There's a lot of moving parts, so having coverage for that is important. Business interruption is one I've covered, and it's important to note that in your business interruption policy, almost universally, when it comes to power failures, there's a 2-day waiting period during which you're not covered. But having business interruption cover is crucial. Dentists can often spend a lot of money, rightly so, on having very professional-looking shop fronts or practice fronts, but very few remember to insure the full value of that practice fit out should something happen and it gets damaged in terms of replacing it. And cyber insurance is something that very few people, unfortunately, do take. Now, we're going to quickly go and, again, open to the polls. And I'm handing back to Jay to ask you the next poll question.
Thanks, Clive. So we've got 2 questions here. So the first question is, do you have business interruption cover? Sorry, guys. One second. It's not liking me now. There we go. So quick answer, do you have business interruption cover? Yes, no, or you're not sure. Okay.
This is going to be an interesting one to see, Jade. I'm not expecting the answer to be more than 30%. If it is, I'll be pleasantly surprised, and it will be a good outcome.
Okay. All right, we're just going to close off that voting now. Looks like everyone's voted. And let's see the results. That's a bit of an even split. So we've got no is about 42% and unsure is 25% there, Clive, and yes is 33%.
Exactly what I was expecting.
Yeah. Awesome. So we're just going to jump into the next poll question, which is a nice quick one again. Do you have cyber interruption cover?
Cyber insurance.
So that's a yes or no or unsure.
Again, I think I'm expecting an even lower number, probably more like 10 to 20% is what I'm expecting the answer
To be insured for?
To have, yeah,
Okay.
to have cyber insurance.
Okay. Okay, so we're just going to close off that poll. Looks like everyone's voted. And I think you're about right. We've got 80% is they have not got any cyber interruption cover, and the rest are unsure with that. So
okay, great. Moving along. So, quick topic I'll cover here is water. Water seems to be the greatest enemy of a dentist. Water seems to cause a high number of claims because of both water that's connected to the machines you use and being used so often. So water damage is quite prolific and can have quite significant impacts. But there's also water damage that can come from outside, being the environment or from in one interesting case, which led to a very large claim, water caused the foundation of a practice that was operating out of a standalone house-type office complex to be rotted and needing the entire building to be rebuilt. So water is something to be very mindful of in terms of its high risk in causing problems. Now, just very briefly, I want to explain the difference between three words that are bandied about in the insurance world that might be quite confusing, and rightly so, and that is business insurance, which is what I've just covered, which protects your practice against physical threats such as fire, glass breakage, and was a subcategory which was business interruption insurance, whereby if a fire prevents you from being able to keep operating, it replaces your income. There's two other types of insurance which are confusing and can be mixed amongst those names. The first one is income protection insurance, and the last one is what's called business expenses insurance. Now, the second and third categories are related to your health and financial consequences that arise from issues with your health, unlike the first category, which relates to physical threats to your practice. Now, income protection will protect what is your take-home pay. So let's say after running your practice, getting in your revenue from your billings and paying for your fixed expenses, your take-home pay is, say, $20,000 a month. That is what income protection will insure you for. So if you're unable to work because of an illness, an injury, or even a mental illness, you will be paid that based on the various parameters of your policy. So it replaces your take-home pay. But what it will not cover is those fixed expenses that are unavoidable that will be incurred by your practice even if you're not at work. So, for example, your rent or your telephony or other fixed operating expenses. So if you don't have the third category of cover, which is called business expenses cover, which pays for those fixed expenses should you be disabled, then unfortunately what happens is your take-home pay has to then pay for those fixed operating expenses because you no longer have the revenue in your practice to pay for that. So just showing that numerically, you can see here, let's say your billings was $500,000. You're unfortunately totally disabled and unable to work. There wasn't anyone to step in to cover your shoes. Your fixed business expenses might be, say, $200,000 a year. If you just have income protection insurance, you will be receiving $300,000 in compensation or payments. But that $300,000, if you don't have business expense cover for your health, will need to then pay the $200,000, which is unavoidable, leaving you with only $100,000 as your take-home pay. And hopefully that tries to explain the difference between those three confusing points. Last section now is a very important section which covers your future earnings, which can be a significant amount of money. If you're a 35-year-old dentist with another 30 years to work and you're going to be earning $200,000-$300,000 a year, this is an asset worth $7, $8, $9, $10 million that you'll be insuring, arguably your biggest asset. So there's four types of cover there. There's life cover in case you died. Income protection is a very important component, often claimed upon, replaces your income if you're unable to work. Trauma insurance pays for things like on a diagnosis of something severe such as cancer. The industry shows that the out-of-pocket cost for something like that can be as high as $200,000, and permanent disability if you're never able to work again. Now, the definitions in these products differ greatly from insurer to insurer, and that's something we focus on very deeply in choosing the right policy for our clients, making sure that the probability of being able to claim on the policy is as high as possible. The statistics are interesting again here in terms of the probability of you claiming. For a 35-year-old, the possibility of something going wrong in one way, shape or form by the time you turn 65 is unfortunately quite high, as 41% as the insurer statistics show, in terms of being able to or unable to work or something quite severe happening. The slide shows that there's a wide range of insurers in the market. There's about 11 or so competing, and the price for any particular insurer is not going to be always the best depending on who you are. And the point of the slide is to show that in one example, the insurer might be fantastic in terms of its price based on your characteristics. So, for example, a 60-year-old male doctor, the insurer I've highlighted was very competitive, but for a different person with a different profile, which happens to be a female, slightly younger, in a slightly different occupation, that insurer is hopelessly priced. So making sure you shop around, get a wide range of pricing comparisons is important, because one insurer is not going to be best for everybody. There's also a changing landscape in life insurance, dramatically so. There's a number of new entrants into the market. There's a number of people who are exiting the industry. A lot of you would have grown up with seeing AMP as a household name, a very big brand name in the field of life insurance. And only last year they stopped offering new life insurance policies, which is quite a dramatic change that we've seen in the industry. And there's also a number of solid players that have been around for a long time who are specialists and have and will be doing quite well in the future. We've also got a number of claims examples, which I'll come to shortly, but before we do that, we've got another poll, so I'll hand back to Jade for that poll.
Thanks, Clive. So this is, when did you last review your insurance or income protection cover? Was it in the last 2 years, within the last 2 to 5 years, or longer than 5 years, and you don't know or don't have this cover?
So this is for the categories of life insurance, income protection, trauma insurance, or permanent disability insurance.
If they're anything like me, it might be 5 years plus. But...
Yeah, I'm expecting it to be a number that's at least 2 years or longer.
Okay, everyone, just going to close off the poll now. Awesome. There you go. Oh, you might be impressed. So we've got 71% that have reviewed it within the last 2 years.
Wow. Okay.
And then 14% in the last 5 years, and then we don't have that.
Interesting. Okay, that is higher than the average. That's good.
Yeah, so we'll just do a second quick poll, if that's okay.
Go for it.
So our next one is, do you rely on automatically given life cover via your super fund? So it's a nice easy one, yes, no, or you're not sure.
So that's as opposed to getting advised cover that you take that's not necessarily within your super fund, that you were just given as a default amount of cover.
Okay, I'm just going to close off that poll now. And our results are, so we've got 60% say no and 33% say yes, and then the rest aren't sure. So
okay, that's in line with expectations. Yeah. So the danger of just relying on default cover is that it might not be suitable for your needs, and it's worth reviewing that to see if it is too plain, too boring, too inappropriate for your needs. Now, in terms of the claims, I'm not going to cover all of them. There's a wide range of conditions that people are claimed upon. We see a lot of claims for people undertaking chemotherapy. We've had people who have needed to obtain money for immunotherapy where chemotherapy hasn't been working. There's unfortunately a very high number of claims being seen for mental illnesses. People are able to claim under total permanent disability and income protection for mental illness, but what unfortunately does happen is at the time of applying for cover, if you have had a treatment for a mental illness, which is very common nowadays, you might have been through an incident for which you needed to receive counselling. It can be a tricky process to get cover without an exclusion for mental illness. You will still be able to get cover, but if it was a single incident that isn't likely to have any signs of repetition, then it's possible to get full cover without any conditions. Insurers are paying a lot of attention to mental illness. They're understanding it far better They're far more sympathetic than they've ever been. And they do actually do, I think, a fair and good job in giving as many people cover as possible and paying valid claims for mental illnesses as could be expected. We've had a lot of clients go on mental illness claims, some for as long as 5 years. They can be very severe, very, very traumatic, and it's fantastic where insurance can step in and take off some of that financial burden. And then there's a wide range of covers, from dentists doing silly things, such as coming off their bicycles, having skiing accidents, cutting off half their hand, doing woodwork at home, and we've even had one dentist who had a horse sit on him, which broke at least 8 or 9 bones and led to quite a significant claim, which is humorous, but also was pretty serious at the time. Getting to the end now, and an aspect that you should have covered in obtaining your insurance or should have received advice on, and if you haven't, it's not necessarily too late. It's typically something that you should seriously consider before around the age of 40, 45. If you haven't done so, it's worth doing the numbers and seeing what might be suitable for you. There's a choice of paying a type of premium which, as you age, doesn't necessarily increase. The premium might still go up because the insurer might have a lot of claims and raise rates for that reason, but as you get older, it won't go just because you've aged. Whereas a step premium will get very, very expensive as you start hitting your 40s and 50s, and your chance of claim becomes very high. And saving a lot of money is a real possibility if you do go down the level premium route. So getting some projections from an advisor such as Experien can be a very big financial benefit to you. One size doesn't fit all. For some people, step might be better, and for others, level might be better. But in the cases where level is better, the savings can be significant. So I think we've got a poll question on that.
All right, so we've got our last poll for today's webinar. So it's quite relevant. Do you have some or all of your life insurance policies on level premiums? That's a nice simple one. Yes, no, or unsure.
So I'm guessing if I had to go out on a limb, we'll see about 35 to 40% on level. I think there'll be at least 10% who don't know, but let's see what the results show.
Yeah, okay, just give it a couple more seconds. Okay, so we're just going to close off that poll and share the results with everyone. So we've got 58% are unsure, 25% say yes, and 17% say no.
Okay, so that's suggesting there is a need to have that reviewed. If you are unsure, it doesn't cost you anything to get it reviewed, and I would highly recommend you do so. So that brings us to the formal end of the presentation, and I'm now going to hand back to Jade. I think there's an opportunity to have some questions and answers. There is a way to register your questions, so over to you, Jade.
Awesome, thanks, Clive. So we're just going to go through a few things about Shine 360 and how Clive has got some offers for our elite members. So we're just going to have those come up. Did you want to go through this?
Yeah, so for those of you who might be interested as a Shine 360 member in taking out or replacing any of those 3 categories of policy, we do offer a cashback amount in the first year of your cover, subject to some terms and conditions, but it can be as high as $500 for a life or income protection policy, and $150 for professional indemnity, and $200 for business insurance. And if you're an existing client of Experien, or you do take up the offer and you renew each year, there's an ongoing reward, which if you take your benefit as a Shine credit, it's doubled. And it has proven to be popular amongst those that are using it so far.
Yeah, that's awesome. So if you aren't already a Shine 360 member, I'm just going to go through how you're able to join. So first of all, if you haven't joined already, you can contact your territory manager, and they're the people that are responsible for signing you up. You can go onto our website as well if you wanted to know a little bit more information before you committed, so to speak. Or there's an actual brochure that's part of our handouts page. So you'll see a collection of handouts along the side. So that includes the Shine 360 brochure, and it also includes some handouts from Experien in regards to Experien and different covers and things like that as well. So if you are already an existing Henry Shine 360 member and you do want to take advantage of what Clive has spoken about today, we do have some contact details for everyone. So if you wanted to contact Clive, there is his email address and his phone number. Now, I will share this with everyone when we do, it will be sent out to you by email. So if anyone doesn't have time to write down those contact details now, that's totally okay. If you do have any inquiries about Shine 360, you can either ask your territory manager or you can come and email shine360@henryshine.com.au and we'll be able to either help you out or forward it on to someone who can give you some answers. So now I think that we'll be able to go to some questions that people might have for Clive. So if there's anything that you'd really like to have answered, please ask us now. You've got a little questions box on the right-hand side, and you can just start to jot those down. And I've already got a question already, Clive, so I'm just going to jump in if that's okay.
Perfect.
So the first question is, why has income protection insurance premiums risen so much in recent years?
Okay, so that has been a big issue in the life insurance industry. And income protection, just to remind those of you who may not know much about it, replaces your income if you're unable to work for reasons such as injury or illness. Two big driving factors behind the dramatic rise in income protection premiums, and when I say dramatic, it's well over 30%, in many cases well over 50%. The first one are those very high mental illness claims that I've mentioned. The public is thankfully far more aware of mental illness. They're treating mental illness, and it's far more acceptable and understood. And knowing that it is a serious and legitimate form of illness. Fortunately, it can be treated in many cases, and the outcomes can be good. So that's driven a lot of claims. The second reason is we're in what's known as a low interest rate environment. So what that means is when you pay your life insurer your premiums, they invest those premiums and earn interest on the premiums to then pay for these future claims over a long-term period. Unfortunately, interest rates are exceptionally low in historical terms, which means the money that the insurers are investing isn't generating as much returns for them, which means they need to charge you more to meet the same amount of claims. Those are the two big drivers.
Awesome. We do have another question come in. Does income protection insurance provide cover for mental illness, and how does that affect insurance applications?
So yeah, almost certainly if you are taking out your insurance through an advisor that is doing good research and analysing the market, you will have cover for mental illness. Some policies that you buy direct or might have automatically given you cover through default superannuation arrangements might have some limitations or restrictions on mental illness cover or how long it could be paid for or some pre-existing exclusions. A lot of people are quite fearful about going for treatments such as psychology, thinking that if they do have treatment or go on short-term medication, that it could severely impact their ability to be insured in the future. It's not necessarily the case. It could impact your ability to take out additional insurance or switch insurance or get new insurance. But again, insurers are becoming far more knowledgeable about how to cope and understand what might have happened at the time and whether they can be more accommodating.
Awesome. Looks like we've got one more question. Can I change my cover at any time throughout the year?
The answer is yes. For most people, we see that for life insurance, they are quite happy to review it at any time of the year and switch at any time in the year, and there's no penalties applied from the insurer they leave. They get a pro rata refund for any premiums they might have prepaid. So that's not uncommon, and we see people have anniversaries right throughout the year. For business insurance, we see that for some reason, people tend to only shop around or look around the time of their policy anniversary. And what often happens is they leave it too late and there's the pressure of paying the premium and they don't do a good job of reviewing or seeing if they can do better, and often can do better. Often the policy anniversary for business insurance is the anniversary of when the business started. That's just where they take their cover at that time, and they just renew it at that time also. But again, you generally can review it at any time, and there aren't penalties for switching. For professional indemnity insurance, what is quite funny in a way and unique in the industry is that historically a lot of dentists have taken their insurance for their professional indemnity through their association. The associations typically charge with their membership fees annually around 30 June, and they include in that process the process of taking out the professional indemnity policy. So a lot of dentists have their professional indemnity insurance renewed just on 30 June for historical archaic reasons. We don't work like that. We allow dentists to take or start their cover or move to us at any time of the year. We give that flexibility. And typically, if you do leave your existing insurer and move, again, there aren't any penalties and you can get a pro rata refund of your premiums. It differs from insurer to insurer, but we're certainly able to guide you in that regard.
Awesome. Thanks, Clive. So thanks everyone for joining us for our webinar today. I've learned a few things today, that's for sure, from Clive, so that's been really great. In terms of what we're going to be doing next, this is the first in a series of webinars that we're going to be holding. So in the next few weeks, you'll see some more information about the next lot. But thank you very much, everyone, for joining us today, and we will see you next time. Let's close one. Right.